you know, do they come out after the bell, TER? I mean, before the bell in the morning, or let's see, does it TradingView have it? Today after the bell? No, I think it's today. I think it's today. I'm almost positive. Let's see what TradingView has. The 21st. So today after the bell. Oh, 5 o'clock. All right. So we got time. All right. So anyway, you got snap numbers unless you're in the stock. You know, not really too much of a big deal. Actually, snap has been pretty solid last few quarters. And it looks to have disappointed so far. TXM was a big one. Not only is it, you know, a big blue chip semi, but it's not necessarily the NVIDIA type semi, the new economy type semi. It's economically sensitive. It's a cyclical. It has ties to the auto industry. You know what I mean? It's got tentacles in many different sectors out there. And usually can set the tone, you know, especially for the chip sector as a whole. And from what I just heard the headline. I didn't really get to look at the numbers or guidance, but the earnings, from what I saw, they blew it out. So we'll see. Should have a, you know, if this holds up, barring any catastrophic comments out of a conference call or whatever the case, this should have a nice impact on the semis off the open tomorrow. You know, and TXN, you know, it's not as hot as some of the software out there, but these semis have rallied. Yeah, there you go. Goku posted the numbers. You could see pretty sizable beat earnings. You know, revenue as well. They raised guidance. Yep. So it needed to do that after a move like this. Honestly, otherwise there'd probably be a dip in it and eventually be, you know, another window of opportunity on the long side. You know, this thing's a beast. So, but we should see some heat coming out of the chips tomorrow off the open. Before I go into, I don't know where to start. There's actually quite a few things that I wanted to touch on and share with you guys. Because we talked about this on the Sunday webinar. You see a market just, you know, kind of, especially in tech, just melting up. And it's been tricky, and it's going to get even trickier these days in individual names because you have earnings involved. Okay. And like today was a good example. Okay. No matter what you saw flow wise, no matter how you were positioned going into the close today, Texas Instruments was likely going to have a big influence on the open tomorrow. All right. So whether you saw all bull flow coming into the weakness, into the bell, you're in the hands of the earnings gods, you know, and vice versa. You could say, oh, you know, this NASDAQ looked soft going into the close, and Texas Instruments can change all that with the snap of a finger, you know, short term. Okay. So that's the problem. That's a big problem during earnings season, especially in individual names. It doesn't have to be your name that you're in reporting. It could be somebody else in the group that you didn't even know was set to report and could have an influence. All right. On top of what we spoke about a gazillion times on these webinars, we really can't get a gauge on how clean the flow is. Okay. It's tough to trust. Why? We know hedging goes up dramatically. Stock replacement goes up dramatically into earnings. Okay. And we never really know what the true intentions of these orders are unless you know these sweepers personally. Okay. We can get a better idea by looking at the details we look at on a day-to-day basis. But when you know that the odds of hedging and stock replacement go up dramatically, that's obviously going to decrease the odds of you being able to tell how clean the order flow is. And a good example today, again, TER, you had actually a bull risk reversal right before the bell today, okay, which is obviously a significant bullish order, right? Combination play. For those of you who may not be familiar with a risk reversal, the player sold puts. So he wrote puts, took in that premium, and instead of pocketing that premium, used that premium to buy calls. Okay. The issue is that's very common around earnings season as a stock replacement strategy. Okay. So if a fund or player wants to take some principal risk off the table going into earnings, okay, but they still want to have exposure to a name, they'll sell a chunk of equity and they'll sell puts out of the money puts, or they'll, open up a combo play like a risk reversal. So that's the problem. All right. So the bottom line is it adds more confusion and it adds to the degree of difficulty in really trying to get a sense of direction out of the order flow. Okay. But even before that, with what we were seeing with the constant rotation and just the randomness of the price action and the flow out there, it's been really tricky in names of late. Okay. Today, again, another great example of it, right? Yesterday, they bum rushed these new economy, stay at home, hot tech names, whatever label you want to put on them, right? The new leaders, the stuff we all want to own. They bum rushed those right off the open. And make a long story short, they got tattooed, but these things exploded, right? Zoom had a week in a morning yesterday. So today, they decided, all right, let these things cool off a little bit. Let's take some money, move it elsewhere, right? And what happened today? The financials outperformed, right? Small caps outperformed. All right, so that constant rotation, what it does, it comes across as sloppy, but net can hold up a market and the indices for a long time, as long as that goes on. And what happens is as a rally becomes more stretched without a correction, the rotation gets more violent and accelerates. So in other words, you start to see, initially rotation, they rotate in for a couple of weeks, a month, right? That's what we usually see. Okay. But then as a rally gets stretched without any consolidation or pull, you see them starting to rotate every day, every other day, every day, sometimes mornings, afternoons. They'll come in, buy tech in the morning, they'll rip, and then you'll see some selling in tech and they'll rotate into some of the other sectors into the afternoon. So it could get a lot more violent. And obviously, you don't need me to tell you how that can create a lot of confusion, and the degree of difficulty in owning names through this mess goes up dramatically. Okay. There's a lot more risk involved. All right. On top of that, I'm sure I posted this a couple times because it's fascinating. I'm sure you guys, get out of there. I'm sure you guys saw this as well. Hang on. All right, this is going to tell you a lot. Like, a lot of people, a lot of traders, they come in, not necessarily doing homework. I'm not even forget about homework, but come in just like cowboys looking to buy, hit the buy button just because they see things going up, but they don't know what's really happening under the hood. Hold on, here it is. Good. And tell me this hasn't been something you noticed and become an issue, right? So this was at a JP Morgan comparing SPX during your regular trading hours and extended hours, right? So the gray line is the S&P 500 when you're all behind the desk, out of bed, paying attention. Okay. And look at this. right? I mean, this is a significant difference, right? You basically, besides this little outlier here, right, you've basically gone sideways. What is that? Maybe 3/8 of the rally up? You know what I mean? So if you, yeah, without a doubt, if you're coming in to the day and you're coming in, especially, we talk about this a lot, right? Chasing green, a gap up, and you're out there looking to buy something just because you see green all over the place, you're going to have a tough time when this is going on. All right, you get away with it here, right, off the sweet spot, but here you're going to have a tough time. All right, and like Steve was pointing out, swing traders benefit over day traders, and that's pretty much, you know, where we've been at since I've been talking about the confusion I've had in individual names. Okay. Obviously, if you're holding on to positions, right, from here, and you're sitting on profitable trades and you're just hanging on, you know, it feels a lot more bullish to you. Okay. But as far as putting on new risk, new swing positions, and expecting, you know, just because the S&P 500 is going higher, expecting the same results from here, boy, you're in for a rude awakening. All right. So, and the reason I'm showing you guys this is not, you know, not to neg you out, not to make you bearish, but this is some of the stuff that keeps sentiment in check, frustrates both sides, right? Because a common issue with especially newer traders who listen to people on social media and just media in general or in chat rooms, they think, well, if you can't make money being bullish, then you got to try being bearish, right? But this will destroy bears more than bulls. You know what I mean? It destroys bears more than bulls. So it's just about being more selective, okay? You can still play, still participate. We look at the signals every week. They're still telling us to lean bullish, right? But just be a little bit more selective, maybe sizing down, maybe waiting for that sell-off to do a little buying, knowing that if you chase green, if this continues, it's a big hurdle for you to run into. You know, this is the stuff we have in front of us right now, okay? For this to change, in my opinion, for things to smooth out again, okay, for things to smooth out again and become a lot cleaner, both flow-wise and trend-wise, you need that quick correction or that consolidation, okay? But the problem is, the reason this is happening right now is because there's so much money on the sidelines. Everybody wants that correction. Everybody. Bears want the correction to make some money on the downside. Bulls want the correction so they have a better entry. You know what I mean? The money on the sidelines has FOMO because they didn't really get into equities. They want a correction. Everybody wants it. All right. And rather than getting, you know, a complete melt up, which is unrealistic, where everything participates, like what usually happens coming out of corrections, right? This is what makes this a beautiful thing. This is a crash, but even when you come out of little dips for a couple of weeks, or, you know, phases of a correction and consolidation, you always get that juice. You know, that initial rally that comes out, the sweeper activity that comes out of that period of consolidation is always the best. You almost feel, we talk about it all the time, where you can throw a dart at any sweeper that hits the board and you feel like you can make money with it when coming out of that. But when you don't get that, and you get what we've been witnessing here, right? We got a little, like, I'll give you an example. Where was it? I like to look at, well, this is because it's a little choppy, but you know what I'm talking about. Ryan, we used to talk about this all the time. Sean, you and I used to talk about this all the time, right? even these, just these little pulls, you get that nice gusto coming out of it. All right, so that's what we would need for things to clear up a bit. That's what we need. The breath will start deteriorating. They get a good flush, and then boom, when they squeeze them, they got more to squeeze. They have more shorts involved to squeeze. It adds a lot more momentum to the picture. All right, so that's what we have to deal with now, on top of earnings, on top of everything else. So it is what it is. All right. For me, I don't know about you guys, but my best stuff, and I've been primarily focusing on intraday. I played a couple new things, as you guys know, Micron. I bought ZI, right? So I added some swing exposure, okay? But the majority of my tactical trades have been intraday for the most part, equity intraday. And I'll be honest with you, unless there's some, rare chatter or some name gets lit up for whatever reason in the afternoon, it all happens to come right off the open, or early morning, I should say. That's where all the juice is. That's where all the most aggressive activity has been showing up. And that's where all the momentum is. Throughout the rest of the day, even the late day, not only have I not been able to make any money, I haven't even had much of any opportunity that has got me excited to get in for intraday reasons, So I would continue to suggest look off the morning. That's something that happens, a common thing in the summer anyway. The best juice comes off the morning, sometimes into the bell, but early morning, especially if you're have a gap down scenario, right? Some selling overnight, or you're coming off some selling like we did today. Okay, going into yesterday, you get a flattish open, something you could get your hands on. That's where you really want to pay attention, stay on your toes, and look to see what they're getting aggressive in early on. All right, and they're day trades. Can you swing them? Yes, but you have to understand what you're dealing with here, and it's going to be a choppy mess for you to catch that additional upside. That's what it comes down to. All right. Yesterday was a great example of how much juice and just the order flow when they're buying the new leaders, right? The order flow behind that compared to when they're rotating into the banks or into some commodities or industrials is like night and day. Like night and day. Yesterday, they lit up the board off the open, right? Zoom, boom, 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 six-figure sweeps like it's nothing. Fastly, $500,000 sweeps like it's nothing, right? All those names, I can't even explain it. Those of you who see the flow and, see it on a day-to-day basis know exactly what I'm talking about. They throw around money in these new leaders like it's nothing, right? And like JP Morgan and Goldman Sachs, which used to catch missile after missile, you're going to pull teeth to get a six-figure sweep there these days. It's just the risk appetite is all for those new economy, new leader names. Unquenchable appetite. It's going to end at some point, but it's amazing how much they throw at these. I won't say they're not all stay-at-home plays. I call them new economy plays. You know what I mean? I call them new economy plays. Right? The economy adjusting to what we have, and it may not be. It's not just a fad. It's not going away. So it's like players are adjusting to it. Right, so and that happens coming out of crashes. You get new leadership. All right, so for me, that's been, even on the tactical side, my best trades, especially when I can get my hands on them. And that's what you want to look for tomorrow morning, right? You had some selling in some of these things, not even all of them, but some of these things today, you know, any of them that were down, you see some flow come in off the open, and these things aren't gapping up, you know, $4 or $5 already. There's some money to be made. There's some money to be made. Yeah, JP Morgan did catch a lot of flow today, and it was half decent. Usually it's just weeklies and stuff like that. JP Morgan wasn't bad today. You're right. JP Morgan was decent. You know, but Peter, you got to understand, JP Morgan used to catch the cleanest action. You know what I mean? Now, granted, banks are a whole different ballgame now, you know, but it's nowhere near the action that JP Morgan used to catch. Like off the Trump election, you know, JP Morgan, Deere, those names, Peter, got lit up like you wouldn't believe. Like you wouldn't believe. U.S. Steel, lit up. Now these things are dogs. You know, they're dogs. They're dogs. Because all the appetite, all the aggressive buying, and that's what creates momentum, right? Like JP Morgan, I'm sure there are players buying it, seeing value, and tucking it away. All right, but we're not looking to do that with all these things. Maybe we want to do it with, you know, a couple names, but as far as when we're looking to get a trade out of something, that's not going to do us any good. You know, so there's not a lot of momentum there. You know, if there's momentum one day, it's not there the next day. Yeah, they're not looking for value because the juice is elsewhere. All right, I bring up the like 1999 example to you guys coming out of 1998. Okay, it was something very similar to what we're experiencing now with these things, with internet names taking a leadership role, telecommunication names right up there, semiconductors right up there, and tech was a beast. Obviously, the NASDAQ bubble blew up in 2000, okay? But after the NASDAQ bubble blew up, all of a sudden, there was crazy interest in small cap, mid cap, micro cap names all of a sudden. You know, so I told you guys, that's where I had my best years of my career. All right, because I was still wet behind the ears during the NASDAQ bubble, and I couldn't buy CMGI up 200 points from where it started. You know what I mean? I couldn't see logic behind it. So I hardly participated, right? I didn't make a dent. I didn't make any money, but it ended up working to my benefit because by me not making any money on the upside, I avoided the downside completely. And I was sitting there waiting for, you know, a rally in the small caps that you couldn't believe if I told you. You had to be there to see it. Right? But everybody was blown up in tech that nobody had any money to participate in it. Right? Except for Sharpies. So anyway, the reason I tell you guys this, it wouldn't surprise me that this ends up becoming the same exact thing. Once tech gets to a point where it blows up, right? They'll probably find all the stuff we're talking about now and see value and be interested. But they're not going to see value here when, you know, you got Shop with crazy growth like it has, and, you know, every dip in this thing has been an incredible entry. You know, until they get burnt, money's not going to look at anything else. So that's the story. All right. So that's where we're at right now. For it to clean up, we need some sort of breather. Okay. Some cleansing. We need the breath to be horrible. We need a good 6-7 to 1 type of down day involved. And then when they do the U-turn, there could be some real solid participation behind it. All right, maybe we'll get it at some point during earnings season, and it'll set up well. We'll see what happens. Here's the webinar paraphernalia for now, so you guys can see what the backdrop looks like. Okay, can we be bearish here? All right, and that was the question we were asking on Sunday, right, for the members only webinar. It's difficult to be bearish, right? This webinar lines up on a Tuesday when Goldman posts this, which I really like, breaks down everything beautifully. So this is Goldman Sachs, sentiment indicators they look at, breaks it down, right? You guys have seen this, posted, I show you guys every Tuesday. And same thing. I mean, it's deja vu every single time we had this webinar, right? The short-term stuff is hot, right? And the positioning stuff has barely budged. Isn't it amazing? Okay. So in simple English, for those of you who haven't really been following along, okay, when you see this here, it increases the probability of a short-term breather. Okay, the keyword short-term, a short-term breather to get these things back towards at least neutral. Okay. But the thing to keep in mind is if that does happen over the short term, these things aren't going this way, right? They're not going to go in that direction. They're going to lean more in this direction, okay? And this is the backdrop that is a foundation for what a rally like this has been built on. Okay, that's positioning. They can't be nimble. They can't get out. Right? When they get in, they need conviction. Okay, for these things to budge. This on top here, you get a couple days of selling, and you could have bullish signals. Forget about neutral. You could have bullish signals. All right, so that's the difference. That's the difference. Okay, and with this here and a couple things I'm about to show you, you don't want to build any sort of bearish bias because it can only hurt you. Waiting for a punch in the jaw is one thing, right? Staying nimble just in case there is some sort of shakeout over the short term, right? That's one thing. But, trying to position bearishly for something like this, for me, it's not worth it. It's not worth it. Okay? Because not only, the one thing is that you don't know how quick and how short-term the pullback can be. Sometimes it doesn't come when you need it to, right? When you have all this money on the sidelines, every little dip, they're looking to get in. That's why you don't get those pullbacks that we all want. All right, so that's the backdrop right now, and it hasn't changed. It's changed a bit. Look, I'll show you where some changes are, okay? This is basically an average of all the indicators combined, neutral, right in the middle. Look at this. These guys haven't even started yet. They haven't even started yet. All right? The blue line, dark blue line is the S&P 500. Right here? Blue line. Look. They haven't even started yet. And, a lot of people are throwing around the VIX being at being elevated at a certain level, and that's why, maybe, right? I see it. I see the logic there. But the point is that they haven't got in yet. They haven't got in yet. And these are the guys, these are, the outfits that when they're in, can create a lot of mayhem when there's a trigger for a sell-off. You understand? They create the big whooshes to the downside, the margin calls, flipping long to short because it SPX broke a certain level. Right. So, again, can the market come in? Of course, there's no indicator in the world that is going to tell you the market can't come in at some point a bit. But, again, how much can it possibly come in when these guys are all on the sidelines still? All right. And from my experience, right, we're talking about trends. So, a lot of you guys, I guess, because you're trading options, look at it as, what can I buy now? What can I buy now? A lot of players out there, okay, who play position-wise, all right, it's not about what you can buy now. It's a matter of, should I still be holding on to what I have? Should I be adding protection? All right? Should I be more concerned with risk so I don't get caught rather than potential upside? All right, so those are the questions you really need to ask yourself. Buying something new every week, there's a lot of luck involved in that. You know what I mean? Especially in the option game. There's a lot of luck involved in that. There's only so much of that you can control. All right? But right now, so what this is telling us, the reason I mentioned that, this still is showing us that if you've been long, right, you've leaned long throughout the whole entire rally, you remain long, okay? As far as adding new exposure, you're not going to go out there and add new risk like you were a month or two ago, right? You rather the market come in, and then you could be looking to add any additional risk aggressively. Okay. Again, this is not a systematic approach, right? You see a name you like, you want to buy some calls, you want to roll the dice, you roll the dice. I'm not talking about that. I'm talking about, looking to lay down a hammer and, get in an aggressive manner here. You don't want to do that. You don't want to do that. So you want to remain bullish, and if they give us weakness, you can look to bump up your risk. All right. Here's the other thing. Okay, hedge funds. And we talked about this on every webinar. So you've had them all in for a while too. It's not like they nailed the top. The market continued higher while they were all in. But as soon as that virus was taken serious and they needed to sell, okay, you saw what happened when everybody's all in the pool and needs to sell. The market crashed. All right, so the market crashed. They needed to sell. They got all out. Not only did they get out, they got short, and they remained short, even as us mopes were leaning bullish. They remained short throughout this whole entire rally until here, right? Until recently. They started covering shorts here mid-June-ish, right? Here's the zero. They started getting long, okay? They're not here. You know what I mean? They're not all in, far from it. All right, but we don't have that bullish signal out of it yet. The same bullish signal we had in the past. You understand? When they were short, we knew they had to come eventually, right? The market was going to force them in, and the market has started to force them in, okay? What usually happens when this ends, they'll be somewhere up here, right? When this rally finally tops out, rolls over, and hold on to your hat, the likelihood is they're going to be up there with everybody else, okay? Can we get a little punch in the jaw and they get shaken out a bit? That would be beautiful, right? That wouldn't be something we're concerned with, because guess what? What are they going to be, net short again? Right? That's the point. What are we going to want to do? You know, what are we going to want to do if they get net short or for a little pull? We're going to want to get long. You understand? So even though, you know, this is not as bullish as down here, right? A pullback we're not going to be nervous or concerned about, because we want to buy. We want to look for entries off that pullback. All right, but this is likely where they're going to end up at some point here. It can happen fast. It can happen fast. You know, it can happen fast. It can happen fast once they give in. You know, hey, listen, you may see positive therapeutic or vaccine related news, like a big therapeutic that's approved, right? Or you find out the vaccine's really, really close. And all of a sudden, you know, now everybody feels like now you want to own stocks. They're missing the whole point. Now you probably want to sell stocks, right? So everyone's going to be thinking just like the tax cuts. Remember the big Trump tax cuts? You had an up day into it, and that was it. That was the top. Everybody thought, oh, now the tax cuts are here. Now we go long. Or the trade war, right? The whole trade war gave you multiple opportunities to get long. Right when there was a trade agreement, that's it. That's when all the risk came back into the equation. So it may be that we get, you know, a positive or a therapeutic or positive vaccine news that's really believable, not like this Moderna crap. And that's the catalyst to get them there. All right, but you see, the way to look at it is simple in my eyes, right? This is probably where they're headed. If there's some weakness in the market, right? If August is a tough time, chances are they're going to be right back here again. And that's going to be an opportunity for a nice rally into Santa Claus. But if they do get here quickly, you know, that's where you got to really pay attention to risk. And not only that, because you should be paying attention to risk now anyway. That's where, personally, I'm not looking to buy pullbacks with time. You understand? So if they're up here and you get a pullback, right, now we want to look for entries and take advantage of it. If they're up here, you're looking for the bounce back and you're looking to get the hell out, because there could be a lot more selling coming. So that's the difference. That's the major difference. All right, so that's hedge funds. And then lastly, but not leastly, the riffraff. My goodness. I have nothing to say about the riffraff. I really don't. They are the riffraff. They got to be proud of being the riffraff. God made them that way, but it's remarkable. It's a remarkable thing, you know? So they're still short, and a short up to the eyeballs. They're still short and short up to the eyeballs. And you can see here, right, this is where some of us got concerned. Okay? Because what happened here, look, they got squeezed. They got squeezed. So now we were worried that, all right, there goes that signal, because they'll probably just cover some more and they're going to be long. So instead, what they did, right, just like we're saying now, a little weakness, we got this little pull, and what they do, they slammed on their shorts. They slammed on the short side to be more short than they've ever been. So, you know, how could you be, you know, how could the word bear even come out of your mouth when you're looking at this? Is you can't. All right, you can't. If the market wants to crash for the one time in its lifetime where the riffraff is all in short, God bless it. You know what I mean? God bless it. What are you going to do? Like the Mets are going to win a World Series one year. Things happen, but doesn't mean you're going to bet on them happening. You know what I mean? So the moral of the story here is that until these things change, we don't really need to make any poor Mets. We don't really need to make any big changes. You know, I told you the frustrating part for me is knowing to lean bullish, right? But because of everything else that's going on, earnings, the rotation, I like to play individual names, especially like later in the rally like we are, and it's been a pain in the neck. You know, it's been a pain in the neck. They got even shorter somehow. I don't know how, but they did. They did. And, you know, the other side, the sharp money, right, the sharp hedgers actually have trimmed a little bit of their position. You know? But these guys got more short somehow. I don't know. I don't know what the rationale is. I really don't. You know? But until we see this, you know, make a move, and it will. It will. I promise you it will. At some point it will. You know, it will. You know, but it's all right in front of us right now. You know, it's all right in front of us. And that's what it is. There's a lot of money on the sidelines, and yeah, they've been taking a bath. That's what I don't, you know, that's a good point that you make, Ryan. Like, that's the only thing that sometimes I look at this thing and I wonder and worry about. Like, they've been short this whole entire move. You know what I mean? Like, can the market come in while they're short? I'm sure the market could come in and give them a little taste. They've been destroyed here. Destroyed. But the way this market works from me watching this stuff over the years, this market doesn't feel bad for anybody. They rip them and rip them and rip them until they force them to get long, you know? The riffraff is the spec money in the futures market. Us, exactly. Us. He's right. It's us. You know, and watch. That's what, you know, me and my buddies were talking about this over last weekend. Not me. We were talking about this. Like, you could see it lining up with like a vaccine, something to that degree, you know, where, all right, that's what was needed for people to feel comfortable again. And now it's time to get in the market. And what people don't realize is you're late. You know, it may feel like it, right? The facts in front of you may look like it's the best time to get in, but you're coming in at the end. This is what the market was telling you the whole entire way, right? The market's been telling us the whole way that there's light at the end of the tunnel. There's something at the end of the tunnel. And when we see it, that's when we need to worry. That's what the market is known for doing. You know, known for doing. Sometimes things change and you see, you see the market react, but most of the time it's because positioning changed. That's what usually happens. Most of the time it's because positioning changed. But right now there hasn't been, like I said, we lost some of our, bullish signals technically, but still have a nice backdrop. Like this tells it all right here. This tells it all. So again, you remind me, when these things get on this side, right, and I'm uber bullish, you can slap me in the face. But I can tell you for a fact that's not going to be the case. You know? No, I'm holding. I still got a couple positions that haven't, but there really hasn't been much doing anything. You got those hot names, even they're kind of chopping around. They just move around a lot. You know, there's not a lot of names ripping right now to new highs. It's a lot of chop out there. You know, a lot of chop. Like, see, like this, that plane, you guys keep asking if I'm in it, I'm in it. You know? But if I wanted to trade it, I could have traded it 3 different times already. But I'm holding it. I got Jans. That's why I'm in Jans and Novembers. So, you know, I'm hoping the one last melt up takes it up with it. But yeah, BHC, same thing. BHC is always slow, but you know, I got time. But I'm not concerning myself with this. You know what I mean? I'm not overthinking it. And they may be losers. I'm not going to lie to you guys. And I don't mean this in an arrogant way. I'm due for a losing swing position. That may not feel good for those of you who are holding on to these, but I'm due for one. You know, it's part of the game. What am I? Am I going to come out of this rally with cash in every ticket? Yeah, right. I had a loser. I have loser swings. I'm not Houdini here. TER reported. They report. No, but honestly, Joe, I've gotten lucky, and lucky. I sold the stuff I sold is still pushing higher. So I don't consider myself lucky, but lucky meaning the market's been ridiculous. And I'm very selective with the swing trade. So it's not like I'm buying 5 different stocks a week, but every single full-size swing position, I've cashed a ticket so far. And I know that's probably not going to end that way, is what I'm saying. You know, I'm a realist. I cashed a ticket even like McDonald's, Trip, you know, AAP, right? SE, unfortunately. So, yeah, I bought some ZI. I got room to add, but I was waiting for it, you know? I've been waiting for it, ZI. I like it. And it's a potential, it can move this thing. You know what I mean? I'm looking for movers now. If I'm gonna take a shot. I like think about the names I own, and that's what I was telling you guys Sunday. Don't get caught up in buying the laggards all the time because you'll pull your hair out of your head. You know? Like if you're gonna buy the semis, you buy LRCX. You know what I mean? When you're supposed to buy it and do what you're supposed to do. You know, you don't look to AMD or Micron like I just did. You know, they may go higher, but they're pain in the rear end. You know what I mean? These things, LRCX is LRCX for a reason because it does this when it rips. You know, all the other ones back and fill. There's so many hands involved. It's torture. You know, you get 2 days of upside and you're like, all right, I'm going to have to sit through some downside now. You almost know it's coming in like a Micron, you know, or BHC. It's just a pain in the ass. You know, so you gotta be ready to pounce on the leaders when the action's there. Here's the problem, right? Texas Instruments, right? Who's in those September still? Anybody? That's another swing, by the way. You could put a check mark next to. Who's in the TXN? I had it. I had a full position in it. Stop it, Todd. You're not in it still. Are you really? I'm jealous. Jesus Christ, Todd. Man. But you know what I mean? Like, that's a name, right? We were all salivating off that action. We all wanted it. Holding on to it's a different story. But so my point being is like, you either own or miss an LRCX and the TXN, right? So now you want another one. All right, what hasn't gone yet? Maybe if it catches action, I'll buy it. Oh, AMD. All right, let me buy AMD. Oh, Micron. Yeah, but it's not the same. It's not the same. That's why I got to work on them too. When you see initial sweeper activity in the goods in a real name, you got to make sure you hit it, and you got to really think hard about, if you want to get out of it or not. If you're going to get out of it and buy a laggard, then don't do it. You know what I'm saying? You guys know what I'm saying. Right? You're like, oh, I'll get out of TXN and I'll buy AMD if they hit it because it's still stuck in the mud. Yeah, the appetite ram for these stocks I haven't seen since the 90s. I'm not going to lie to you. I haven't seen it since the 90s. They just, there's been certain sectors, like I remember solar got hot, but it was a fad, it lasted a month or two or 3 months and ran out of juice and they got hammered. These are real companies that are changing the world. They didn't just come around. They've been around. I've been watching this shop dip and go up for God knows how long. I remember the Z-Scaler when it was a baby off the Drunken Miller sweeps, right? And all of us were saying, oh my God, this thing's going to be an animal. An animal. Just caught $1 million sweep a year out. An animal. But look, every correction they bought, every dip they bought, and these companies are getting better, right? Their growth continues to get better. And that's why the multiple keeps expanding. Eventually it becomes a bubble because everybody wants to own them. Coop. This is another one. I remember when this thing, I didn't even know what the hell they were off initial sweeper activity. I didn't even know what the hell this thing was. There's so many, Jocelyn. There's so many. GDS. People still don't know who this is. They still never heard of this name. MDB. So if we do get a correction, it could be another entry in these things, and then you get that final run up. But it almost looks like we're not too far away from that final run up. See, this is consolidation. May not feel it, right? But this is consolidation here. Yeah, John, and don't listen to the PE people, okay? The PE guys that come on CNBC. The PE is inflated for a reason. You know what I mean? For a reason. Because the earnings, they're making a bet the earnings are going to catch up to it. Their growth rate is so ridiculous that eventually their earnings catch up to it. All the big leaders, all the hot stocks that have become blue chip names, they all turned out that way. They all turned out that way. In 99, yeah, Shop. You know what kind of growth rate Shop has? It's insane. Like Shop already is borderline blue chip in my eyes. LVGO, right? All those names. 99. But this is what it feels like coming out of 98 into 99. Triple digit growth, I know. You know, these are not internet stocks selling toys on the web, and because they added .com, the stock just quintupled. So, but obviously, you know, these things have been noticed now. They're crowded, and when they get crowded, the risk goes higher. You know? Oh, by the way, that was another thing I wanted to mention to you. So you have the Gamma Crew and quite a few others that I follow that are talking about expecting added volatility, choppy volatility in these names. So what we've been seeing recently in these names, we're going to continue seeing. So up 3%, down 1.5%. Up 2%, down 1%. So as this rally continues, they get more volatile, but it's more noise than anything else. You know what I mean? It's more chop than anything else, net. You know, so that's what a lot of people I'm talking to are expecting, and we should look out for. And it's been happening right in front of our eyes, you know? Like, look at like Zoom, right? Up 3%. Today, what was it down? What? Wait, that can't be right. Oh, 8.14. I thought 14 cents. I was like, what? How's that possible? So it was down 3%. Yesterday it was up, I don't know, 5. So it could make decent trading for us. Yeah, the Zoom, where was it we owned the Zoom? You don't want to know. You don't want to know where we own the Zoom. Here, right? This bull flag you guys were telling me we were in at the time? Here? Right? Like, look at the spots on these things, right? Look at the spots. They were incredible spots. The biggest lesson for all you newbies out there, right? All you who weren't able to take advantage of this rally or just getting your beak wet in this game, the biggest lesson out of this is what just happened and how to be ready to take advantage of it when something similar happens again, because that's where all the money's made. All the money's not made now. It gets more difficult now. It gets trickier now. It gets tougher now. It gets choppier now. It gets messier now. You know? But the ability to step aside for this, for the most part, and when those signals come blaring, being ready and developing the coconuts, you guys know what I mean by coconuts, to get in and take advantage of it. You know, and that's going to get better each and every time you experience it, you know, because it's tough, right? Tree, I remember talking to you, Tree, when New York, this is New York's Pearl Harbor, they were saying, remember? People were scared to go out of their house. You know, we were like, yeah, right, sentiment is washed out. Yeah, Sharpies are buying with 2 hands, but how? How do you get bullish now? How do you buy anything now? But that, like Tree just said, in this rally right here, there's nothing better than that, right? That's where all the money is. That's where all the money is. Even if you're conservative, that's where all the money is, right? Even if you're playing with kid gloves on, you want to be careful about it, not even being aggressive. That's where all the money is. Because the spots, that initial sweeper activity, all the new action coming in, right? Because no one was buying here. Everybody was pooping their bloomers. All the sweeper activity that started to come in was hitting names at beautiful spots. All of them. SE, Zoom, right at spots before they started to explode. Exactly. Right. You could get a little sloppy, right, Tree? That's what you're saying. You could get sloppy down here and you get away with it. Here you get sloppy and they sting you immediately. Immediately. You could be early down here buying and you still get rewarded. Yeah. And listen, you learn a lot of this stuff. It just comes with being around, being in the game. You know what I mean? And experiencing it. But you have to remember to keep an open mind and keep your eyeballs open and block out all the other crap when you get to this point again. Because there will be a point, it may not be like this, you know, you may not get a crash, but there will be a correction. There will be sirens going off of Armageddon, and riffraff will be fully loaded short. Sharpies will be long. The bull bear indicator will be at 0. You know what I mean? All that stuff will be lining up, and it's go time. And it will be go time. That's the biggest takeaway from here at this point now. Even with a potential melt up, that's the biggest takeaway. Because it's tougher now. It really is tougher now. Noise. Everything is noise. Everything is noise but the signals to me. You know what I mean? Everything is noise. You got noise in your own head. You got noise on CNBC. You have noise in the chat rooms of who's shorting for Armageddon. You have noise on Twitter. Yeah. It's all noise. It's all noise. Because at those spots, like what Tree's saying, at those spots, it's never a positive backdrop. You understand? At those spots, you're never going to have positive news around you. You're never going to feel good about getting long. Never. Never, ever. You know what I mean? Never, ever. Right. Ackman, hysterical crying, breaking down on CNBC. It was mayhem. It was mayhem. It was absolute mayhem. You know, and it's hard to focus on what you need to focus on, right? Ackman crying the blues, suicidal. Meanwhile, at the end, right before the commercial, and I bought Marriott, blah, 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 QSR, blah, blah, blah. He rattled off like 15 stocks he bought as he scared the crap out of everybody. Right before the commercial. And he made $2 billion. Oh, God. You can't make it up. You can't make it up. And now he's God again, right? He's going public. I don't know what the hell he's doing now. But yeah, so that, you know, I hate to say it, you know, because, you know, right here, we have the potential for melt up, and, you know, people want to get excited, especially if you didn't take advantage as much as you feel you should have. You get excited for that melt up, but even the melt up it's tough. It's not that easy unless, like we said initially, you're in that SPY position with cushion and you're just sitting in it. You understand what I'm saying? That's the melt up benefits the people who are in stuff already. Okay, ready? Do a shot. Like in 99, okay? The people who made all the money, okay, was all the people that were in all those internet names and didn't flinch at the shakeouts. They bought them. They bought them at decent levels and they let them go. You know what I mean? And they let them go. The problem is when the music stopped, they still didn't get out of them. You know, so that's what happened. Yeah, they bought all those names at sick levels because they don't know any better. They just bought those names to get in, and they end up like buying. Basically, here's the example, okay? Buying, but you can't even compare it to now because Zoom is a real name. But like buying Zoom at where we were saying, where we played it back here, right? So at $85, and holding throughout, not getting shaken out. But then when the music stopped, you held it and it went down to $20. That's what happened. So we're from 80 to 300 to 20. And the market, what the market did, right? So think about that. You held this dip, you held this dip, you held this dip, you held this dip, and now you get a big move, and now comes another dip. You're like, oh, I held every dip. I'm not getting out of this thing. Oh, I'm not getting out of this thing. I'm not getting, you know what I mean? But all the people that were making like the money, while it was so crazy, were the people that were in and they just rode it higher. What they did wrong is they never pulled the plug. They never had any strategy to pull the plug. They thought it was going to go up like that forever. But yeah, so that's the melt up. You know, that's the melt up. Buying is not that easy. Like, you got to buy these dips in Zoom. Like, can you do that? I'm not that good at that after this skyscraper here. You know, with size, like, can you buy Zoom with size off a pull, like a little pull like that? I can't do it. You know, I could buy it and trade it, but I can't buy it and give it a leash. And so that's what we got. Huh? Yeah, exactly. And volatility was going up when the stocks were going up. Exactly. Exactly. Oh, one more thing I wanted to mention to you guys more. So members, Nortel. I remember Nortel. So we've been talking about the Sharpies not shorting VIX. Remember we were talking about that? We've been talking about that. So what I found out is you got some, let me find this right. You got some spec money that's starting to short VIX. And I'm hearing that's the reason why Sharpies haven't gone short VIX. So usually Sharpies will go short VIX when the spec money goes long VIX. You understand? I already see you people saying, uh-oh. There's no uh-oh yet because it's not at an extreme. If you remember what that was, what year was that? Do you guys remember when that short volatility trade, that was this, right? The panic attack here. Okay, so basically the same thing went down here. All right, you had spec money who wasn't getting into equities yet, but was shorting VIX. Okay, and then you had this melt up, and here's where it got to an extreme. So there you had Sharpies all in long VIX futures and riffraff all in short VIX futures. That didn't happen yet. That didn't happen yet. That's why the melt-up scenario people think is still alive. That's a good question, Ani. That's a good question. But yeah, the Gamma Gang has been shorting VIX, right? They've been right to this point. But that's a good question. I guess when you get the public money or you get enough of a big enough of an extreme to join the Gamma Gang, that's where it becomes a problem, Ani, you know? Because they got away with it for a while back here before it ended up becoming an extreme. Like they got away with it for a while. And then remember you had the volatility panic attack? That's what this was. There was no news or anything. It was just a vol panic attack, and you had one of those vol products explode, blow up. That's it. Volpocalypse. Volpocalypse. Try to get that out of my mouth with some coffee. Because what happens is, Tree, like all specs and all riffraff, when they start doing it, they get rewarded and they think it's easy money and they continue to do it and they continue to do it and they continue to do it in more size and then it gets to an extreme and then it blows up. You understand? So there's more upside before it blows up. Right. VIX will go up if not necessarily. That's a tricky question. That's what we were talking about. In 99, VIX went up with the market. Not all the time, Trey. Not in melt-ups. So again, like everything else, we got to look for extremes, and there's no extreme yet on the VIX positioning. There's nothing there yet. But yeah, that's the whole catalyst for the melt-up is this right here, based off of primarily VIX, what I'm hearing. And you saw the other here, and then we'll wrap it up unless you guys have some names to talk about. But this chart too, hold on, let me get it. I posted it the other day. I think it was out of JP Morgan. Hold on. I could just search. What am I doing? Hold on. Move this thing. It was okay. Move. What are we going to do that? Let's see. There it is. So see them here? They're starting to creep a little bit. Down here. Systematic. The blue line, systematic strategies. So if the VIX does come in, these guys will end up with more exposure. And they'd go up there, hence more buying, and these guys trip over themselves when they buy, creating more momentum. They are, right, they're not all in short VIX, though. You know what I mean? They're not all in short VIX. They're all in short stocks, but they're not, it's nowhere near an extreme yet. Nowhere near it. Nowhere near it. Yeah, but Chewy is pets.com. Chewy is pets.com, but profitable. But a real business. Pets.com was just an idea. No? I agree with that, but it's, you could say Zoom is broadcast.com. No? Chewy's not real? What do you mean? Broadcast.com. Mark Cuban. What was that? Chewy's a real business. Pets.com was, they added .com to their name. Oh. I thought you would be, I never know with you, Nick. I can never tell when you're being sarcastic. You're calling Fed members girls when they're guys. I never know when you're being serious or not. Yeah. All right. Anybody have any questions before we wrap it up on this? Fastly. You see the sweeps in this thing? I don't know what to tell you on this thing. Buy dips and trade it. This thing's a beast. How much more can this thing go up, though? I guess, look at this. You had a dip, though, right? Clarida. It's all Clarida's fault. Uh, it honestly, I can't believe I'm saying this. This doesn't look as bad because you had Pink Panther up here off the Niner. Now you got the little dip here. Doesn't look as bad. You have earnings here though too. I think they push it higher into earnings. That's my vote. That's what I say. Into earnings. Then you're in the hands of the earnings god. Work. Your girl Kathy is building a position in work. This always looks good to me, this work. It's just a choppy son of a, right? But it's at a nice spot again, Tree. I like it here. Yeah. No matter what, I like it where it's at here. You just can't buy the rips. You know that. You've been trading this thing well. Yeah, I had two names I added in my swing account. I got ZI, I just bought. ZI. I bought some yesterday at the last minute before the bell, and I got a little more into red today. There was a dip earlier. And yeah, ZI Septembers. ZI Septembers. And I got a little room to add a little bit more if I want to. And the Micron, I bought some. I bought Micron. Micron looks good. Micron, I bought off the Octobers. When was that? I can't keep track of the days. Somewhere over here. Was that this week? No, that was last week. Micron. Yeah, Micron was last week. Last Thursday. Right. So it was right around here. But you see, look at this. Nice. And then nice. Like today, I knew it. I said to myself, we were talking about in the room, do you take the profit, the little quick profit off the table in Micron? Because look, what this thing is. It's a choppy mess. But Texas Instruments might be give it a boost tomorrow. It's a mess, this thing. It's a mess. It can get hot. Don't get me wrong. It can get hot. But it's more messy than hot. Those other names, like, if you catch a zoom at a nice spot, you're getting paid as soon as that thing moves. Like Micron, you want that little extra, and you got to deal with Ajita. Look, every time. You could trade this thing all day long. Buy it here, right? And dump it here. But if you were betting on the breakout, you have no hair left on your head, right? There's a lot of names like that. There are a lot of names like that. AMD, Work, Micron, Plan. Look at this, right? The one thing that keeps me, that's why buying at the right spot helps, right? Because if you buy here and Plan, you're so aggravated, you're probably pulling the plug on this thing. But when they sweep it at the right spot and you're playing there, you got the trade if you want it. If you hold for more, you got to deal with some Ajita. Yeah, they're range bound, but this could be some consolidation before they go, They look good. They're tough to sit through. You need time. But there is a lot of this going on, okay? There are trades out there. But as far as catching that extra move, there's not a lot of it going on, guys. Give me some names that is moving right now. That extra move. I'm not talking about run. Well, that could be. That had news though. Yeah. Wow. Jesus Christ. There was some decent buying. They love this run too, sweepers. Bova loves this run. Everybody loves this run, and I don't have any. But this thing caught news. You know what I mean? It caught news. Spot. That's another machine. Yeah, but still, still choppy. You don't know what's going to happen here now. So if you bought, off pulls, you're okay. But this could still be just choppy. It could still be just choppy. We don't know that yet. Space finally had some movement, but that hasn't been a hot name. It just started to move recently. Even the other one today, we traded every day. It catches action. I should have just bought it initially for a swing. Sono. Now it's got that choppy grind higher. But there's a lot of chop involved, guys. There's a lot of chop involved. You still got the Sono from 9? God bless you. You see, Ryan? I got to do more of that. You see, you guys remember this name? I told you I bought equity. I bought a decent chunk of equity. I had profits in it, and I wasn't going to sell it. And then what happened? Niner, Pink Panther, and I sold it, okay? It looked like a good move. Watch what happens now. Watch what happens now. I left a piece, so maybe it'll soften the blow. But watch what happens now. That's my problem. I say I'm going to hold it, right? We bought it where we buy it. Here, I think it was. I'm going to hold it. And then I see Niner, Pink Panther. I'm like, it's going to dip. There's going to be some sort of breather here. There was. But it only lasts a couple days. Pink Panther is just exhaustion signals. Where it should get tired. Yeah, it was a nice profit. But I want, there's so many of these things, these under the hood names that just keep going. I'm willing to risk some profit to catch it, but I can't help myself. When you look at them every day, it's not easy, Trey? It's not easy. You look at it every day, you're watching every tick. Not easy to hold on to winners at all. Costco, that's a great stock. Costco, Home Depot. They're all studs. These things are going to be around, right? They're not dinosaurs. The Squares, the PayPals, like people put this in the tech category. They're not even tech. This should be put in the fins, and maybe it'll lift the fins as a whole. No? They should put PayPal and SQ in the financial sector, but then probably they won't catch the money they're catching now. CHGG, is that still going higher? Oh, wow. I thought it was dipping a bit. It did dip a little. They're animals, these things. They're animals. Yeah, Walmart's been solid. Walmart's been solid ever since that news. Caught some flow off the news there. Now you got earnings in mid-August. That's your next hurdle. Yeah, GE could be earnings positioning, though. Most likely is. That's the question. Would they be sweeping GE if it wasn't ready to report this month? Would they be sweeping it like they are? I don't think so. That's the problem, Paul, That's the problem. Unless you like it as a earnings flyer, as an earnings bet. I think they were Jans, too, if I'm not mistaken. T-Woo, I know that name. Caught a little bit of action. Wow. I think I lost money on a day trade on this thing somewhere. T-Woo. Yeah, speaking of Chinese tops, that YY had a decent pop off a Niner. Looks like it faded a bit. Good stock. ARK is buying T-Woo too? Jesus Christ. This YY looks good. I didn't own it. If I owned it, I probably would have dumped it today anyway. What was the other? Oh, Huya is another Kathy stock. It's been moving though. Huya is a little sloppy, but it's been moving. Looks good. Looks good. Even these Chinese names, they all look good. No, only Paul, only when there's sweeper activity into that niner. SE's dying? I gotta see this. Oh, come on. Are you serious? This SE's going to $200. $200. Oh, the humanity. $200. Just to ruin my life. To ruin my life. BLDP. There's been a lot of flow. We were talking about this earlier today. Just look at this chart, though. Like, this is what I did today, and I just, I can't. Like, they bought this whole rip. Like, you're going to buy it here now, though? I guess some of them are going higher. I can't do it. I can't do it. You do have a little breather off a niner. You got earnings coming up. I don't know what an island reversal is, but this is a little too extended for me. I got to see I got to see more of this, and then we could be talking here. Neo, the flow has been getting a little messy, MW, of late. You know what happened? There was a downgrade there. What was it? Goldman downgraded it? So that probably added to the messiness of the flow. But, Neo almost looks like that BLDP, right? They look the same. I guess they're in the same group. What's that other one doing that I owned and sold for 30 cents? The other one of these plays. Not pump? No. Fuel? No. No, the alternative energy play. Plug. That's it. Yeah, that looks like it too. Look. It's a clone. Looks just like BLDP. Tons of action in this one too. They bought them up. That's the hidden sleeper there, Sean. I think that's the one to look at if you want to roll the dice and try to get lucky in that group. It's the biggest piece of poop out of all of them. But if they're looking for a new name, the Momos, you know what I mean? I own a little piece, just in case, of the equity. It's cheap. It's really cheap. Solo. Oh, yeah, that's what Solo does? Solo's another one. That thing exploded. Solo. That's right. Mark. Oh, we saw flow in all these things, right? Mark. That's alternative energy too? Same thing? Mark. I remember that one. Oh, no? Oh. A lot of spec names. Well, throw out a couple more names and then we'll get rolling. There's been some flow in that one. IDEX. See, I don't like this. I don't like this. And then even when they breathe, maybe for a trade, I don't like looking for the big move after this because I feel like they need to do it for breathe longer. Like if it can happen, but it looks more like INO. Watch this. Watch. See? Okay. Like INO caught flow here. Okay. INO, they were buying here, and then it had the explosion, right? And then came down and started breathing, and there was flow here. Okay? There were pops along the way you could have traded, but look what you had to sit through trying to catch a big move there. You know what I mean? There was a lot more of consolidation involved before the next move. So that's why I don't like, even though breathers trying to catch a big move out of the ones that already hatched. I'd rather roll the dice on something like this. The fuel cell that's dead and buried, and hope the Momos find it and squeeze it. I'm talking about roll the dice plays anyhow. These are, roll the dice plays. JD's a stud. You hope it's down off earnings and buy it. That's what JD, honestly. That's your risk, that there could be some selling off earnings. But if you're looking for an entry, you hope it's down off earnings and buy it. There'll be flow too. There's always flow. WKHS, that's got a lot of riffraff in it too. Same thing, big, and now you got the breather. You guys hear about this? People putting on the short Tesla, long workhorse trade? Did you hear about that? Yeah, Kathy's doing it, I think. This moves with Tesla? Somebody was telling me Kathy trades around that core Tesla position. She's been selling the position she trades around and buying Workhorse as a replacement. I don't know if that makes sense, but that's what I'm told. TGNA, let's see. Yeah, catches action. They all catch action. Solo, IDEX, they've been catching action. What name was that? Somebody mentioned the name. I forgot I missed it. Oh, TGNA. I remember that stock. What is this? TGNA. Hasn't been any flow there, though. Oh, broadcast. That's right. Yeah, Nikola, I'm not interested in that. See, like, same thing, but on steroids. Oop, and then you get this breather, but I mean, Jesus Christ. Like, how big was the move, That's a monster move. Like, it hatched. If it's going to go higher, spin on it. Look for something else. I'm not interested in this Nikola. Even off a breather. STM. That was the one that had flow, right? STM. Looks good. Slow, though. It's an ADR, Eli, So it's a bit slower. But looks good. I love TER. If there was a dip off earnings, that would have been an opportunity. Is it down off it? It's up off earnings, right? Oh, wait a second. That's up $5. Wow. Damn. Well, there goes that dip in it. This is a good name, TER. They like to buy dips in it. But, yeah, I like the name. You just got to wait for a dip. Now, TSM is a beast. Tree, TSM is a beast? You agree? It's just a beast. These semis, they all look good to me. You just got to try to get them on dips. Marvel. What, NXPI? They've all rallied a little bit. So they may need to, well, you're going to get a gap up tomorrow on them probably. So I'd be careful. Don't chase the gap up. It's not worth it. It's not worth it. Are they moving some of these things in the aftermarket with it or no? A little bit, Micron in them. Yeah, plan is either going to zero. My position goes to zero. Three scenarios. Position goes to zero. I cash a nice ticket, or riffraff get long and I pull the plug on everything. They rolled down. They rolled into November's. Yep. So that's my plan now. Again, if I was going to trade it, I would have sold it on this rip. I would have definitely sold it on this rip. Did you? Good, good. They sold some of those Jan calls, Sean, and they rolled them into November's. So shorter dated calls. You know, good. I can't, you know, that's what I usually do. I just decided, Tree, this one I'm going to give the leash to, and if it costs me money, it costs me money. You know, I gotta roll the dice if I'm ever going to catch a nice winner with a decent sized position. You know, I have to. You're going to do that with ZI Ryan. That's not a bad stock to do it with either. That's not a bad stock to do it with. Like from what I was told with this ZI, like this is real deal. This is a real deal name, no? I know Bova loves it. Loves it. Yeah, and you got, you know, we got lucky with it because, you know, there was a lot of hype. You had the IPO and you got a breather here, boop, into a niner, and then it catches September sweepers, the first one. Hedge eye short. That's good. September's, what were they? September 40, yeah, 45. September 45. Yep, they bought it right at the bell yesterday. So we'll see. Like Ryan's, I can't blame him, is going to try to catch a nice winner out of it. I don't know if I'm going to give it that big of a leash. You know, plan is my horse for that. And it's already frustrating me. But yeah, you gotta do that from time to time. Otherwise, you know, that's why, like Tree with SE, that's why it bothers me, because that one should have been the one. You know what I mean? If any of them, that one for me should have been the one. That one. No other one. That one. So that's what I have nightmares over with that thing. Anywho, all right, boys and girls, it's always a pleasure. You bought some work leaps. That's the way to do it, right? So you don't even have to worry about it. That's the way to do it. All right, so we have an idea what we're looking at here, right? We know the backdrop, but don't let the melt-up talk fool you. Things get a little trickier, a lot trickier in names around this time. All right, if we get a pullback, that's going to be a good thing. So save some ammo. Yep, be good, guys. Good luck the rest of the week. I'll speak to you guys.